Wow, the Fed cutting rates soon. Price is moving up. Let's try and long this next dip. Well, dang nabbit, I missed it. Let's try shorting this back down instead. Oh, stopped out. Oh, I give up. Okay, if you can't beat them, I'll join them. Let's long instead. I'm in. Yes, let's go. Sound familiar? Never sure when these big moves are going to slow down or stop? Well, don't worry, I've got you covered with the MDX Trendmaster Liquidity Bands tool. And the bands help show when these big expansion moves happen to the upside or these high velocity dumps to the downside, where they're likely to slow down or possibly reverse. Now let's dive into the bands tool. So the MDX Liquidations tool does share some features with the liquidation levels we saw in part 1. For example, the bands tool is primarily designed to use for crypto, but can also be used for some TradFi assets such as gold. Also, the bands tool uses exactly the same table of the different leverage amounts and the percentage price moves for liquidations to happen. Now, to add to TradingView, go to the indicator menu, to the invite only section as before, and click on liquidations. I'm going to change to the 4-hour chart, and I'm going to turn the table on here, and I'm going to switch to bands mode. Just give it a moment to load, and there you go. So you can see here on the chart the different liquidation levels, but displayed in bands format, and then this center line here is the core liquidity. This video is part 2 to the introduction to the MDX Trendmaster Liquidity tool. So if you haven't seen part 1, click up here and go and watch part 1, pause this, and when you've seen it, come back. So there are some key differences in the calculation logic the liquidity bands use versus the liquidity levels, which is worth getting your head around to better understand and get the most out of this tool. So the first difference is the bands use individual candles to do the calculation of where to place the band, and that depends which chart you're on, whether it's the 15-minute, 4-hour or daily. Unlike the liquidity levels, which uses only either daily or monthly data. The next thing is that the liquidity bands have an added weighting applied to adjust for important higher time frame trends, such as daily candle closes, which can shift the bands around when big moves are happening. And also, importantly, this is not just a simple moving average. It's a much more sophisticated calculation. So to explain this more clearly, let's jump over onto the whiteboard and I'll show a simple example to sort of get your head around this. So the calculation logic for the bands is more advanced, and it has 3 components. First, it takes the volume weighted average price data from the candles across that 500 look back period. It also does an average calculation across the 24-hour sessions, and it uses the same liquidity percentage calculations based on that leverage table we saw before. And then the algorithm combines all of those 3 components and adjusts the liquidity horizontal levels using this extra data to convert that into the bands either side of the core liquidity. Now, I can't give a simple example on the calculation, or this would turn into a mathematics lecture, because it is quite complex. But intuitively, you can see why in the bands mode, the bands will shift around depending which time frame chart you're on. So for example, here we're on this example, the 4-hour chart, and it would plot the bands on. But if you went down to, let's say, the 1-hour chart, and I'll just draw on the candles. So with the 1-hour chart, each 4-hour candle now becomes 4 individual 1-hour candles. So from 3 4-hour candles, you'd have 12 1-hour candles. So now the values for the volume weighted average price on the 1-hour chart and the session averages would look a bit different to the 4-hour chart. So when the liquidity lines are being plotted on, that adjustment will mean the bands appear differently on the 1-hour chart to the 4-hour. So now if you click in TradingView and try the different timeframes, you'll see those bands moving around and adapting for which chart you're on. So I hope that's helpful. So now you fully understand how this works. How can we use the tool in our trading to make money? Well, generally I'd stick to the 4-hour and 1-hour time frames. And the first helpful use is spotting continuations. So you'll often see when there's been a move up in price and an aggressive expansion, if the price remains above that core liquidity line in the center of the band, it's likely that the expansion will continue. Next, you'll often notice that when there's been a big pump or a big dump, those bigger moves will max out and stop around when it hits the 5x point on the liquidity bands, and it will rarely go beyond that to the 2 or 3x. And also subsequently, that 5x band level will often then act as a support and resistance point for several days or weeks afterwards. Next, when it's hit that level, you'll often then see price revert back to the core liquidity line in the center of the band as price seeks new liquidity back in the middle there. And then last of all, when it's come back into the middle, price will often then shift into ranging price action, and you'll often see price oscillating in the range between the 10x and 20x points on the band, sometimes for several weeks, where during that ranging period, the core liquidity will act as an SR flip as it ranges up and down. So next, let's look at some real world examples on the chart where this has actually happened to bring this to life. So the first example is a big dump that happened back in the summer of 2022, and we saw prices drop by around 45%, and you can see on the liquidity bands that the 2x and 3x's, that's where the price ran out of steam, because literally there's no positions left or no longs left to liquidate. Next, we saw a reversion back towards the yellow core liquidity line in the center of the band over the next few weeks. And then next, you saw a shift to ranging price action in between those 10x and 20x points on the band over the next few weeks. The other interesting point is that lowest liquidity drop down here in the 2x, 3x band, that acted as support over the next almost 5 months until November. The next example is the FTX crash that saw price drop around 30%. And again, you can see the dump ran out of steam when price started hitting those 5x and 3x points on the liquidity band in the blue and purple zone down here. Next, we saw price moving back gradually towards that core liquidity line in the center of the band. And also, you'll notice that that 3x point in the band then later acted as support, and also that held again for several months until later on we started to see the first signs of recovery. Example 3 looks at the recovery Bitcoin had from 16K. So you can see when the positive expansion move started, the liquidity bands tool would have helped you stay in the trade longer, because all the while price is outside this yellow core liquidity line, it indicates the expansion is likely to continue. Also, you'll notice the 2 points it did slow down was when price again hit those 5x blue liquidity band lines. So these would have been good points to maybe de-risk, take some profits. Next, when the price did hit those levels, we saw the price then revert back towards the core liquidity line again. And then after that, it then shifts into the ranging price action, again oscillating between those 10x and 20x lines on the band. Example 4 is the SVB crash, and here you've got a dump and a pump. So if you look closely, you can see price dumped down to the 5x levered longs there in blue on the liquidity band. Then you got the reversion back to the core yellow liquidity line. That then flipped from resistance to support, and the expansion then continued and continued up. You could have rode that long and stayed in the trade until you hit the 5x liquidity shorts at the top here. Then you got another reversion back towards the core liquidity, and then price shifted into ranging price action and oscillated again between those 10x and 20x turquoise color blue bands here all the way through till around June. So to help you implement this into your trading strategy, let's look at a more recent example and see how you can use the tool with the real-time price action as it's developing. And I'm going to go back to January this year, before the big pump in Bitcoin from the new ETF buyers. So I'll hit play. So first of all, we can see price has bounced off the lows, come back into the core liquidity, gone above, and then come back down to test it as support. Now this could be a good point to start thinking about longs. So let's say you entered a long position here. You could say, put your stop loss at a logical point down here. And then let's say you wanted to target up to those 5x levered short position on the bands up here. And that might be your first take profit. And then you might be targeting a bit higher than that even to close the trade. And then let's see how this would develop as a longer term swing trade. Hit play. So there you go. So far, you can see how price has stayed above the core liquidity line. And there, that was about over 10 days past. And this would have helped you to remain in the trade because you're expecting continuation while price remains above that core liquidity line. So here, as it's coming back to the core liquidity, you may take some profit here before reassessing at the next point. Press play. So here you can see price has come all the way back to the core liquidity, but it's not gone below, and that liquidity is remaining as support, and price is now starting to move up. And you can also see there's a nice big gap here in between the core liquidity and where price is here. So again, you might be expecting continuation. So even though you maybe didn't enter a second long trade over here, you might try again for adding to your position with another long. So let's say you entered up here, put your stop loss below the core liquidity line. And again, let's say you're aiming for that 5x. So you're a bit late on this one, and it's a bit of a wider stop loss. But anyway, let's see how this plays out. So there you are. We've already hit the 5x's. So probably you would have wanted to take some decent profits here, or maybe even close the trade. Although in this situation, I would say you wouldn't close the trade because you're still well above the core liquidity line, so you may be expecting some further continuation. So let's say you just took half profits. Let's continue. Okay, so it played out to some extent. You got a further move up, again hit that 5x levered band up here before finally we saw a bit of a rejection here, and again reversing back down to that core liquidity. So hopefully if you were in that second long, you would have seen it hitting the 5x, taken some more profits there, and yeah, fine, you might have got stopped out on the rest on this dip. And then if we keep moving forward, as this trend continued, and I'll let it play, you can see that price just keeps remaining well above the core liquidity line, so you just keep expecting more and more continuation. And then eventually it runs out of steam. And here you go, look, now you can see price has come back to the core liquidity. It's lost that support, flipped it to resistance, gone underneath the core liquidity line, and that would indicate we're probably moving into ranging price action. So let's play the next part and see what happens. So there you go. It's shifted into ranging price action, and it's ranging in between those 10x and 20x lines on the bands. So here you might actually think about entering a short position to play the range. Let's say here we'll set a tighter stop loss just outside that 20x band, and we'll aim for the opposite side of the range. Okay, let's press play, see what happened. And there you go. So that trade would have paid off, although notice something here. We were aiming for the opposite side of the range liquidity bands, but obviously over time the bands are moving. So actually that 20x point here shifted up higher. So even though your original trade target was down here, you'd actually probably want to be closing the trade earlier now, even though you'd still made profit, because that liquidity band has now moved. So there you go. There's hopefully some really good examples of how you can actually use this tool in real life with your trading on these higher time frames. Next, some quick tips on the menu settings. So you will notice that in bands mode, the sensitivity doesn't actually have any effect. Neither does the only active liquidations. And you also cannot use the custom leverage settings. Also, if you want to change any of the style options, instead of using this menu here, come to the style tab and you can change to crosses or circles or whatever styles you want there instead. So it works slightly different to the levels mode. For advanced traders only, this bonus section looks at how you can use the bands tool even on the lower time frames for scalping. I'm going to play a quick video from one of the founders of MDX Trendmaster who has some great tips on how this works.
Very oftentimes when you see major losses of core liquidity or major gains of core liquidity, that's going to be the move up to take the 50x's and then the 100x's before you have some type of reversal on the low time frames. Or when you start losing and backtesting the core liquidity, that's kind of the center line. That's usually any bearish backtest goes lower, any gain goes higher. But like I said, I really strongly tell people to use this on the much higher time frames. But what we actually found is that this is the only thing that's ever found the core market lows going back to the inception of Bitcoin, which is pretty nuts. So even from going back to like 2011, it called the full market lows, where you're getting into the whatever the core liquidity was of like the low of the market. And same thing back in 2015, right? Perfect tags on the core liquidity structure to like find the absolute market lows. Same thing in the 2017, 2018, we found those lows, like pretty much about as close as you can get to it. Same thing in the COVID dump, right? Wick into the core liquidity, higher low, continue. Same thing as we got here back in 2022, the dump, the second low at the 2022 area. And now it's effectively like we're in bull run conditions, but it's highly doubtful that we ever get below 20K again. It's the only thing. I mean, even like the stock to flow chart, all these different higher time frame predictors have kind of failed, and this is the only one that I've ever come across that literally calls the bottom every time.
So great info there from Crypto Viking on using the bands tool for scalping on those lower timeframes. If you'd like to have a go at that, then click on the link in the video description down below and head over to mdxalgo.com, and you can sign up and get access to the liquidity tool and 9 other really useful, powerful indicators. And if you use my affiliate link, you will get a nice juicy discount when you sign up. Anyway, I hope you've enjoyed this. I've had a blast making it. Smash all those buttons, show your love and give me some dopamine. Also, if you've gotten value out of this video and you'd like to learn more, then check out video coming up here or possibly here for the next episode 3, when I'll be looking at the funding rates MDX tool. And I'll give you a quick sneak peek. Here's the funding rates tool, and it can be really nice to identify those reversion points when you see divergences on the funding rates or flips from positive to negative funding. More on that in episode 3. Otherwise, have a great day. I'll see you in the next one. Cheers.